Sherman-Williams, Fortune 500, of course. They are a paint supplier and other materials company with over 5,000 locations worldwide, and they employ about 50,000 full-time workers. They closed out the market at 410 today, actually, and they are experiencing a little bit of a slump in their report that was released in their third quarter report. Their CEO did recognize that they've had slowed growth more than they would have expected after their merger. They acquired Valspar, Valspar is a paint manufacturer that's very highly rated, and they were expecting a huge increase in revenue from that acquisition. So they're not expecting, they haven't gotten the growth that they expected, and that can be accounted to their Latin American locations that have been experiencing some problems with their struggling economy. So geographically they're having problems, as well as an increase in raw materials, which accounts for most of the costs of their goods sold. So with that affects their profit margin, and the spike in raw material prices has lasted longer than they expected. So, like I said, closed out at 410. A lot of experts are suggesting that people either hold on to what they have or start buying because they are at a low price right now. They're not encouraging anyone to be selling your Sherwin-Williams stocks. As far as, the investors being in good hands in regards to this stock, they do have a history of rewarding their investors for being patient. So they've been increasing their payouts consistently over the past 40 years consecutively. Also, they do have a history of really good revenues, which has been increasing. At least in the past 6 years, they've had year-over-year increases in revenue. The stock yields about 0.77% at the current share price. Their competitor, Home Depot, one of their biggest competitors, also has a growing history of dividend hikes. Their stock yields about 2.1% right now, but also it should be kept in mind that Home Depot and Lowe's, other competitors, they aren't really going through a period of expansion or globalization like Sherwin-Williams is. They're kind of just, focusing on where they are right now. So really, Sherman-Williams is in the process of expansion, and they do have global intentions, and that's what the Valspar acquisition is going to help with. Also, they're about to have an exclusive deal with Lowe's, one of their competitors, to have they'll be exclusively providing paint to Lowe's. So Lowe's is going to be selling Sherwin-Williams paint almost exclusively in their retail locations, which helps more in the retail side of Sherwin-Williams because they do have a lot of consumer and a lot of supplier interaction. So as in regards to the return over equity, basically just seeing how much a profit a company generates with what the shareholders have invested in them. It's been pretty consistent over the past 5 years. It peaked significantly in 2015, and it was at 134%, and now it's down to the around 40s and 50s. Like I said, they are really watching out for their investors when it comes to the payouts and things like that, but it also should be noted that they are going through expansion processes, and the Valspar acquisition did cost them a lot of money, but they had been prepping for that, and they are ready to start making a profit off of that acquisition. It is a slower growth than what they expected, but the projections in the coming years do look pretty good. despite rising raw material costs and despite problems in Latin America. So as far as earnings per share, right now it's at $4.13, but in the next fiscal, it's expected to be almost 5 times that much, so at 21, which those numbers are looking really good. However, the paint company, Sherman-Williams, cut its GAAP guidance by more than $1 per share, projecting to be $13.85 to $14 per share for the full year. Even after accounting for some extraordinary items, adjusted earning guidance for $19.05 to $19.20 per share was at the low end of what Sherman-Williams had given for its range last quarter. So the second quarter, since I know we're in the fourth quarter, but the reports for the third quarter just came out, if that makes sense. Again, going back to Home Depot, Home Depot's on the track to crack $800 billion in sales this year. So they have a lot of cash flow, a lot of revenue is coming in. So it's comfortably above a lot of its rivals. It is doing very well, but at the same time, it's not doing that much better than Sherman-Williams, and they are in a process of acquisition and expansion, and they just opened another location in Waco, and then they just were opening a factory in China. So they really do have global intentions, which is a little bit more than what you could say for Home Depot, which stays a little bit more national. So I would recommend buying now for Sherman-Williams. It's a very old company, and they tend to be pretty consistent and look after their investors.